Today we will discuss AMC stock. We will review what has happened after this serious short squeeze, and I will definitely show my portfolio, my positions, and my results after closing all my positions. Here is how it looks right now. We will also analyze the volatility, what is happening after the short squeeze, and examine support levels. We will look at 3D volatility and definitely consider market forecasts. Let's start from the beginning. After the short squeeze, which saw a 300% rise up to 10, I closed all my positions in AMC according to my strategy. I made a total profit of $8,000, which you can see in detail in my video. The $8,000 is already locked in as realized profit. Some might disagree and say that you should hold these stocks until the end, but my goal is to make money in the stock market, not to hold shares while the company continues to dilute them. In my opinion, this is not the best strategy. So I continue to open new positions after closing all the previous ones. But before we look at those positions, let's first examine the volatility, as it is the key indicator of what is happening. We can see that with the short squeeze, volatility rose significantly, especially towards call options. This is a completely normal situation. After the stock started to decline and stabilized, it has been trading sideways for a week now. Volatility is slowly starting to decrease, but it remains at a very high level, reaching 200% for some strikes, and generally around 150%. I remind you that before this, volatility was around 100%. This is actually good because it allows for very profitable options selling, which is what I am doing. I have already sold several options, and I will open a few more positions right now in front of you. Now, let's take a look at the volatility smile. We see that the volatility smile is directed both towards a decrease and an increase. In reality, it's a common situation when put options are priced higher than call options. This is an absolutely normal and stable situation. Currently, we see a slight distortion where call options are priced similarly to put options, meaning volatility is increasing in both directions. This is rare, but it's something to watch for. One can sell some call options, which is what I have been doing. Now let's look at historical and implied volatility. As we can see, the historical volatility white line increased slightly after the massive squeeze, while implied volatility is decreasing. Typically, historical volatility may decline sooner than implied volatility. Thus, I wouldn't bet on a return to historical levels, even though it is generally a good earning strategy. Next, let's examine resistance levels and options trading volume. The largest trading volume is now concentrated at the $5 level. The stock hasn't been able to break this level. Previously, there were also significant resistance levels at $4.50, $5. However, after the short squeeze and the accompanying news, all these levels were broken due to high trading volumes, and the stock continued to rise. Now the situation is different. With lower trading volumes and less intense trading activity, these levels are significant barriers. The stock can only break through and rise above these levels with increased trading volumes. As of now, this hasn't happened, so we might have to wait, or it might not happen anytime soon. There's also strong support at the $4.50, $5, and we haven't dropped below this point. There's significant resistance for put options at that $4.50, $5.50, $5 are key levels to watch. The stock is currently fluctuating within this range, bouncing between these levels, which actually provides a good opportunity to make money by selling options. If we break these levels, either up or down, the situation could accelerate. Now let's look at 3D volatility. Here we can also see a distortion towards call option. This includes all the information on expiration dates and trading volumes. This will undoubtedly help us create sound strategies. As a reminder, I previously closed all my positions, some of which were at a significant loss. For instance, I had sold call options that resulted in a considerable loss. However, the rest of the options closed very well, and the stock itself brought me significant profit, with $8,000 from 1,600 shares. I am now forming a new portfolio. I sold a put option with a $4 strike price, for which I received $300. You can see this put option in my portfolio right now, 10 contracts with a $4 strike price. I will now look at the options chain and potentially sell more options. I think a good strategy would be to sell, for example, 5 call options with a $6 strike price. I am doing this live in real time. I will add this information to my spreadsheet right now. The transaction is complete, and I have sold 3 call options with a $6 strike price, each costing me $20. Selling at a $6 strike price is relatively safe, considering the significant support levels. Plus, with these few options and additional sold put options, I am well protected. Currently, I do not hold any shares, but I plan to accumulate more in the future. I will likely increase my shares not through direct purchase, but by selling put options. For instance, I might sell put options with a $5 or $5.50 5 price, earning a premium in the process. The premium is very high due to the significant volatility. In fact, I might do this right now, sell 5 put options with a $5 strike price. I'm doing everything live, as you can see. Again, I do this to build up my position because I currently don't have any shares. If the stock starts to rise sharply, I'll stop covering it. My goal, as I mentioned, is to outperform AMC stock. I've recorded the completed transaction in my spreadsheet. I sold 5 put options with a $5 strike price, each costing $80. This will be an additional profit for me. If the stock doesn't rise above $5, I might not roll over these options and just let them expire. resulting in acquiring 500 shares of AMC. I'll decide the best course of action as the time comes. Now let's summarize. The most interesting part is how much my portfolio is outperforming these stocks. I started this experiment with $10,000. My goal is to outperform AMC stock using complex combined strategies including puts, calls, and stock purchases. You can follow this experiment in my AMC playlist, where I record every video. My goal is to outperform AMC stock. Over time, my portfolio has consistently outperformed AMC stock, sometimes by as much as 50%. For instance, when AMC stock was down 36%, my portfolio was up 17%. Let's summarize today, May 24th, 2024. My portfolio hasn't changed since the last time, as there were no new trades. Currently, AMC is at $4.72 too. I'll add this to the spreadsheet, showing that AMC is up 12% since the experiment started, while my portfolio is up 82%. This means my portfolio is currently outperforming AMC by a record 70%. Let's look at the graph. The blue line represents my strategy, and the red line represents AMC stock. As we can see, AMC stock has fallen significantly, but my portfolio remains stable because I closed most of my positions. This shows that while AMC stock drops, my portfolio doesn't. Moving forward, I will continue to build my portfolio and positions. I have already opened several positions. If AMC starts to rise, my portfolio will also start to grow. Everything is as transparent as possible, and I discuss this in every video. You can watch from the beginning. The entire AMC playlist has all the details. Now let's look at AMC stock to see what's happening. As a reminder, my philosophy is that I don't know where the stock price will go. I don't try to predict price movements. My main task is proper position management from the perspective of mathematics and probability theory. This is what I do, and I show everything as clearly and transparently as possible. Anyone can check the graph and see all the details. I aim to be as thorough as possible. It doesn't matter to me where AMC goes, I will make money regardless. If it goes up, I'll profit. If it goes down, I'll profit too. This is the essence of sound position management. If you learn to manage your positions like this, it won't matter how the stocks move. I remind you that I don't believe in a short squeeze pushing AMC to $100, $200, or $300. I've always said that I believe a short squeeze could push it to $10, and that's what happened. You can check my previous videos for this. Many bloggers claim there will be a massive short squeeze, but in my opinion, they are either mistaken or deliberately misleading you. Stories about a huge number of locked shares, hedge fund theories, and conspiracies are simply myths. Why are they myths? There have been the largest trading volumes ever recorded for AMC. Even in 2021, when AMC stock surged, we didn't see such volumes. Yes, there are more shares now due to additional dilution, but still, no hedge fund went bankrupt. Nothing catastrophic happened, and Wall Street survived. This reinforces my position. In summary, I emphasize the importance of position management based on sound mathematical principles and probability theory. It's not about predicting where the stock will go, but about strategically positioning yourself to profit regardless of the direction. This approach is transparent, effective, and ultimately the key to consistent success in trading. There are no blocked stocks. No such thing exists. Hedge funds don't want to go bankrupt. It's all just a big story, my friends. Smart people work in hedge funds. Thousands of mathematicians. What I'm telling you right now is child's play for them, just basic information. All these conspiracies are just lies and deceit. Again, I'm telling you the truth. I show all my positions, but those bloggers don't show anything about their positions or what they're doing. I can't trust any of it. We just need to admit it. Yes, you may have lost some money, but it's okay. You need to start from scratch. For example, I'm starting a brand new portfolio from scratch. I've already recorded a video about how I'll be trading. This experiment will start very soon. The amounts will be small, so anyone can watch and learn what I'm doing. Everything will be completely honest, completely transparent. I'll be explaining what and why I'm buying. I've already recorded a video about Trader's Diary in Excel. You can watch it there. I explained how I'll be recording all my trades in an Excel spreadsheet. This Excel spreadsheet will be completely free, and anyone can watch it anytime. If you have any questions, write them in the comments. Good luck to everyone.